talking all about semis and more for your tech portfolio. It's nice to see you.
Good to see you too.
Thanks for being here. So your idea is that the trade war is good for your investing in tech and semis. Why?
I think for semis because they get hit the hardest every time there's a tweet or some other headline about the trade war. But the reality is long term, we can't go anywhere without semiconductors. I mean, it's the internet of everything is powered by semiconductors. There's 1 trillion units sold every year. And if you look at the future where all it's going, the growth, it's going to be in semis. So I think you got to use the volatility to your advantage as a trader and investor.
So we see the volatility and you get a headline as whether it's Huawei or tariffs or, concerns about global growth. And then you see this big sell-off. Your idea here is that you get in there and you pick up a semiconductor and you hold it, or you hold it only for a short time?
Well, look, I think you got to stick with high quality undervalued, right? I love NXPI Semiconductors because of the fact that it's undervalued, it's levered to all the big tech trends. So yeah, when the headlines hit, I think under $100, it's kind of this, I don't want to call it set it and forget it, but buy it and then look for a 10% rise and then you can move on as a trader. As a fundamental investor, I think anything under $100 is a great entry point for that company.
Right, so you're saying it's like rinse and repeat.
Yeah.
This is your recipe, so you can do this over and over and over again. I mean, some people do this with the VIX. When they see it at 12 or 13 or 14, they buy it and then they sell it at 17 or 18 or 19,
Yeah.
So NXPI is NXP Semi's ticker symbol. And the idea here is that the Internet of Things, that everything is run by chips. And that's only going to grow in the years ahead, right?
Yeah, so I mean, it's a large company at $30 billion market cap, but you get the upside of an individual stock, but it's really like an ETF on all the major tech trends. They have exposure to autonomous driving, to wireless charging, to the Internet of Things, to 5G. I mean, you pick mobile payments, you pick a tech trend, they're levered to it. So you're really getting that diversification in a single stock.
I was reading one of the Barron's articles, and it said if you're going to own two chips, own NXP Semi and Broadcom.
Yeah.
What do you think about that?
I don't disagree. I mean, Broadcom is levered more onto the mobile side, whereas NXP gets a lot more automotive. Broadcom has been traditionally, it did great in the 4G boom and has positioned itself to be a big winner in the 5G boom. So I don't think you can go wrong with those two big players.
Do you think 5G is, do you think it's really going to be the biggest deal ever? Everybody's really holding it up to really be amazing. Is that possible?
Look, I think it's like artificial intelligence. It's going to power a lot of new things, right? I do think it's the next big tech trend that we're going to have to follow. I mean, the rollout begins in earnest next year, so we'll find out.
Right. You had some smaller names that I don't follow as closely, including GSI Technologies and Atomera. Why those?
Yeah, Atomera I like because it's like a early ARM Holdings. They don't actually make the chips; they make the patents to design smarter chips, so they get exposure to all the chip makers. And then GSI is, I think, one to keep on a watch list for artificial intelligence. They've got a new chip coming out this year. These are obviously much more speculative plays, but small caps, I think there's a big opportunity for a company like Atomera because it's a licensing and royalty model. Where you're not worrying about all the manufacturing risk.
But you feel like, is there a lot of risk with those two investments?
I do. I mean, I think you have to, everyone takes their risk tolerance into consideration. I mean, NXPI is a mega cap, trading at a cheap valuation, not as much risk. And Atomera, I think is, you got some more risk in there, but still a lot more upside.
Let me ask you about some of the brands that we recognize most that people have in their portfolios, whether it's an ETF or they just own them straight out. Names like Microsoft and Apple, these big players. Are they still good investments? Do you buy them here? If you have them, do you still hold them?
Yeah, I think Microsoft, don't bet against Mr. Softy. I think, they're coming off a great quarter in the second quarter. They beat the top and bottom lines, and, they're really taking Amazon's lunch in the cloud services business. So growing about twice as fast. I think you have to be more selective. We used to be able to just buy the FANGs and not worry about it. I think you have to focus on the Microsoft, Amazon and Apples of the world and really steer clear of the Netflixes that are just so contingent on growth and negative cash flow. So
the Netflix, Google, you don't like as much?
Yeah, I don't like as much. I think, if I had to come with a hard and fast rule, the $3 trillion market cap companies, really. I mean, it's Amazon, Apple, and Microsoft. I think those are the big names that you got to have in every portfolio.
What else in technology are we missing? Is there anything else in the world of tech that we should not miss?
Yeah, I think biotech is always an exciting space. I focus on a lot of new and innovative drugs there. There's a company that's got a treatment for type 1 diabetes that really took the world by surprise, Prevention Bio. You're seeing a lot of players.
What's the ticker on that?
PRVB. So they put out a study that demonstrated that they can delay the onset of type 1 diabetes by at least 2 years, and there's some patients that have gone as long as 7 years.
Wow.
So this could be, a potential next blockbuster drug for a company like Johnson & Johnson or, any of the big players in big pharma to acquire.